Welcome
Let's
to
do it.
Purchase to Profits. I'm Seth Ferguson. Our guest today started off in residential real estate sales, closing $2.2 million in volume in his first 12 months, but quickly realized being a realtor was not for him. Since then, he has moved into the investment space, flipping over 150 residential transactions and building a portfolio of rental properties with over $20 million in closed volume to date. He is also the host of the Invest This podcast, where he interviews elite real estate investors. Now, with this knowledge and experience, Scott Bauer is moving into larger investment opportunities in multifamily and commercial real estate, focusing on building strong relationships with his investors, providing solid returns, and building wealth for his family. Scott, welcome to Purchase to Profits. It's great to have you on the show.
Seth, thank you so much. Glad to be here.
Yeah, I'm really looking forward to this. You've got lots of stuff on the go. So let's get right into it. So what are your real estate goals? What are you striving towards right now?
So, this year is really going to be an exciting year. We'll start off with the single family realm. I own and run a wholesale business here in the sunny Phoenix market. And so we're looking for $1 million in gross revenue this year. That was kind of the goal for last year, but we ran into some hiccups trying to invest in some apartment buildings, which pushed, we didn't quite hit our goal, but this year I'm very confident that we will. I'm very excited about that. And then from a multifamily standpoint, I want to buy probably 200 doors this year in two or three different properties. I don't think it's really, it's just a matter of doing it. That was really the biggest barrier for me, is just getting away from between my own two ears, really, because ultimately at the end of the day, you just got to go do it.
For sure. And the more people I talk with, the headspace is the game changer. Like once you change your thinking, it opens up so many more opportunities for you, for sure.
And actually, you talked about earlier in the call, my first year in real estate was just as an agent, and I was with Keller Williams Realty. And they put on a little bit of an event called Bold. And at that event, I remember the teacher getting up there and talking about how if you change the way you look at things, the things that you look at change. And basically what he was saying is, if you think that buying these big commercial buildings is such a big deal and you're scared of doing it because it's your own self-imposed limit, then you're not going to do it. But if you change the way you think about that and you say, okay, well, it's just another deal, it's just, the next step towards my goal, then your chances of succeeding are probably a lot greater.
Yeah, no, that's well said. So with your goal, you mentioned about 200 units on the multifamily side. I'm always interested to know, some people do dollar volume. Some people say, I want to own so many units. Why did you choose 200 units as your goal rather than a dollar volume amount?
So it really comes down to a management structure. What I've come to understand about, I own several single family rental properties, and the bigger, the better. The bigger, the easier, I guess I should say. So the reason I say 100 doors is I know that, or break it into 100 doors for two different properties, each being 100 doors to make up 200, is because I know that the management, the structure, how all the finances work is much larger and easier to get done when you're above 100 doors. That's where it makes sense to have on-site property management. You can have on-site maintenance. And ultimately, your economies of scale are that much greater. So, if you have a 5% vacancy rate, which is pretty standard, then or more than that, then it's not that bad. You have the economy by having 95 other units, if we're using 100 units for this example, to cover the 5 units that are empty, if that makes sense. So that's why. Okay,
for sure. And with 200 units, we're probably looking at 12 million maybe in
and so this is where it ranges. So, and that's why I don't put a dollar figure on it. If we're looking at a sub market somewhere, you could get 100 units for $8 million, from 4 I guess to 8, and we'll actually dive into a deal that I got into later in the call here. But if you're in a hotter market, you might get 100 units for 12 million by itself, right? So it really just depends.
For sure. And with on the single family side, you've got a portfolio that you've grown. Do you have, now that you're transitioning more towards the multifamily side, are you going to continue growing that, or are you just going to put it in a holding pattern and really build up that equity on that side?
Yeah, we'll probably still continue to buy stuff. I'll still continue to add to the portfolio because at the end of the day, when you find a deal, that's a deal. And, you know, um, based on just where I'm at in the career and really my age, it really makes a lot of sense to buy these single family houses. I think that rentals will be around for a long time. They're still a powerful tool, not only as a good investment for cash flow, but also for tax purposes, for building ultimately legacy wealth, which is what I'm shooting for.
Yeah. And in your journey to building that legacy wealth, what are some of the things that you've done that you thought would work, but didn't really turn out?
Um, we're still trying right now. One of the biggest things last year, 2018, I started to hire people in my business. And what I found was that that's not as easy as you think it might be. There were definitely some things that I didn't expect. I not everybody is just like me, right? And not everybody's going to be like whoever the employer is or whoever the business owner is. Of course, nobody cares about your business as much as you do. So for me, that was a learning curve. I hired a couple of people, had to let a couple of people go. And, so this year we're just kind of reshifting things and putting more emphasis on making sure that I train people the right way, that, that I don't expect them to be me, because at the end of the day, that won't be the case. I'll be let down.
Yeah. And it sounds like, with your plans to scale, this is really one of the first steps you have to take to allow yourself that freedom to scale your business, just because you can't put everything on your own shoulders.
I come from Iowa. I come from a farming family. Hard work is in my blood, and I enjoy to do it. And so, for the last 4 years, really, I've done most everything on my own, and I've been successful at doing that. But you're right. As time goes on, that's not sustainable, and ultimately, I need to get out of doing it all myself, because it's not sustainable, and it's very hard to scale that way. So you're right there.
For sure. So do you have any rituals or habits that you use to keep your goals top of mind, like maybe daily or weekly?
Absolutely. Every single day, I'm very regimented. So I wake up at 4:50 every single morning and jump in the shower. Right after that, I meditate. And meditation has been probably the biggest game changer for me since I started doing it 2 years ago. And the reason why is because it keeps you centered, and it keeps the Headspace is actually an app that I listen to get started. It changes everything. You really learn how to manage stress, how to make sure that your goals are top of mind every single day. And I think that it's made me a much more laid back person, much more laser focused on my goals. And I can't get enough of it. It's the number one thing that I listen to, or that I do every single day. Followed right behind that with working out. So after the meditation at 6 a.m. every day, I'm in the gym, and I'm actually a CrossFit guy. So we're hitting it really hard every single day. And, with those two things combined, I think there are two of the most powerful things that you can do in the morning.
Yeah, well, a good WOD's going to wake you up any day of the week.
Right,
So,
right.
Yeah. So how'd you get hooked on the meditation? Like, was it somebody that you knew that introduced it to you?
Yeah. So I'm a product and a big believer in coaching. And one of my coaches is a Tony Robbins peak performance coach. And, he didn't introduce it to me. I was already doing it when we met, but he really reinforced the power of doing it. And, that I've heard it from multiple sources. The more that I read about very successful people, the more that I find out that they are also meditators, or people that are using meditation to, keep their life in check. And so that was, I guess, where I found out about it. And like I said, I wouldn't change it. I love it.
Yeah, I've heard a bunch of people talking about meditation. Joe Rogan talks about it a lot on his podcast. So it's that's something I'll have to look into. You'll have to send me your stuff.
You know what? I tell you what, it takes a while to learn how to do it. And actually, I would encourage the app called Headspace, because it takes you through the journey from not ever doing it to getting to where you don't need to listen to, a recording to do it every day. And it teaches you about what's happening in your brain and why Because at first you're like, what am I going to do? I'm just going to sit there and be quiet and just sit there. And it's kind of odd, right? But what you learn is what's going on in your brain and what's going on, all the noise and all the background stuff, and all the thoughts and feelings and emotions that are going on in your brain at any given time. And no matter what, we all have that little voice in the back of the head that's always talking. Even while we're on this call right now, I know that in the back of your head, there are thoughts, there are feelings, there are things going on. And the important part is to learn how to sit back and watch that all happen. Because as soon as you do, it's a freedom that is hard to explain.
Yeah. So I'm just trying to understand. So once you go through your meditation routine, do you just feel more focused, or is it just, you're just more relaxed? Like, what's the feeling that allows you to go throughout your day working towards what you want to accomplish?
Well, so as an entrepreneur, and all entrepreneurs out there, we have things that are coming at us 24/7. You have all these things that you have to do. You have goals that you want to get done for the day. You have different emails and problems that happen. I got rental properties that the dryer breaks or something, something's going on. And there's just a lot of noise. And so after I'm done meditating for the day, I know that I can try to exclude all this noise in the background and just watch it happen and only focus on the stuff that's really important at that time. And that seems to be a good way for me to really move forward every day.
For sure. No, that's really interesting. So I'm really glad you brought that up.
I would highly encourage it, man. I mean, it is game changing. Absolutely.
For sure. So have you had any, in your building phase of your residential single family portfolio and moving into multifamily, what are some challenges you've experienced along the way as you grow your business?
Oh gosh, where to even start, right?
Yeah.
I mean, it's a time suck, right? So it's trying to manage, okay, I'm trying to build and I'm trying to expand, I'm trying to scale, but I still have to make sure that money comes in the door and that deals are getting done. And, so it's trying to find the balance on how all of that works. For, several years, really, I worked every single day for 10 hours a day, at least, sometimes 12. And it just, it wears you out. And so having to find out the balance on how to have a social life, and also as an entrepreneur, it's kind of lonely because, you have friends and maybe friends that aren't entrepreneurs and they work their standard job. And so it's hard to relate with those people. And when problems come up and things occur, you don't have anybody to talk to. And that's why I encourage, mentorship and coaching from people, surrounding yourself with people that are doing the same thing that you're doing, because you have outlets to try, that can help you. So probably finding balance was a big one. Just where to start, how to find, how to be able to do everything, at one time, going out, sourcing deals, making sure that you check your marketing every single week, every single month, every time you're dropping it, making sure that what you're using is working. We can go a lot of different directions with this.
Yeah. Okay. Well, you know what? Let's flip to a deal, the Keystone deal that we'll talk about, and then we can go through. I'm sure there's a ton of challenges with that one. So you're transitioning into multifamily. What's the one deal you want to talk about?
Okay. So last year we got into 120 units in a small market in Kentucky. And this, I'm not going to say exactly where it's at, but it's in a pretty small, I guess, city, but it's a very good city. And the reason it's a very good city is because it's very diverse in jobs. And when I'm looking for multifamily investment opportunities, that's one of the major indicators for me on a marketplace that I'd want to invest in. And the reason for that is because I want to be in a market where there's job diversity. There's not one specific, one big business that runs most of the show, has most of the GDP for that area, for that city. And the reason why is because let's say something happens and now all of a sudden that company goes away. Well, you might lose half the jobs that are available in that city. And if you have an apartment complex, those people are going to leave and move out, and there's going to be nobody to replace them. So this specific market that I'm in Kentucky, is the two major sectors are healthcare and technology in this industry, and they only make up 15% of the market. So very diverse. And the other thing in this market is that even in the downturn, they didn't really see a big dip in valuation from a home price standpoint, from a lot of jobs being lost, things like that. So I knew that it was a safe area to go into.
For sure. So was this deal, did you find it through a broker, or was it you talking directly with the vendor?
Actually, so I found the deal through a guest that I had on my podcast.
Oh, nice.
Believe it or not. And him and I just stayed in touch for quite a while. And he actually came across the deal. I was looking for partners on it. And so brought the deal to me, and here we are.
Perfect. So what really jumped off of the page at you when you first saw the deal? What was the big blinking light that attracted you to it?
Well, kind of like what I just talked about, from the very beginning, one, the purchase price on this property was reasonable, was very reasonable. Half of the property had already been renovated. The other half was still yet to be renovated, but the old owners basically ran out of money, and they didn't have any way to get rid of it. Or didn't have any way to complete the job. So half the work was already done. The other big benefit to this deal was that the seller was willing to owner finance or seller finance 75% of the purchase price of the property. So all of these indicators, as well as the market, it was really a no-brainer, and glad that I got into it when I did.
Yeah, and I think that the big thing there too is, half of the property was already done, and the market had proved. I'm assuming at that point, with any rent increases, like it was a proven system at that point?
Yeah, I really hadn't seen a whole lot of decrease. We've seen constant increase, but even when the market fell in 2009, we only lost like 10% in that market. So it wasn't much of a dip at all, and it wasn't anything to be concerned about. And really at the time, I was looking for an area to get into a deal. I didn't care necessarily as long as all these indicators that I just told you about made sense. I was ready to pull the trigger. And, it was kind of my first step, and this year is going to be that much better.
Oh, I'm sure it will be. That's just a stepping stone. So you mentioned that you had a partner in the deal on the general partner side. Do you want to maybe explain how that works? Just, a viewer might not realize how two general partners can work together to put a deal together.
Absolutely. There's actually 4 general partners in the deal. So it's kind of the best way to go about it. On a general partnership, it's really a team sport. When it comes to multifamily investment, or really any commercial investment or big dollar investment, it's a team. You can't do it without a property manager that you know, like, trust, and really believe in, who believes in what your business model is, that you can really get along with. You have to make sure that you have the management on play. You have to have a good general contractor that's going to do the renovations for you. You have to have a general partner who's knowledgeable about the deal, lives closer to the area, and can visit on site. And, it's, like I said, it's a team sport. So when it comes to any sort of large investment, the team is the most important thing. Now, I'm very grateful to have very experienced people on the team. There is one individual who has 20 some years of experience in multifamily syndication. And so to have that knowledge and experience a phone call away is very, very important.
Yeah. How did that team you built, especially with the experience, how did that help you on your equity raise, your money raising side? Was that a big bonus for you?
Well, yeah, I think it is, because anytime that somebody has more experience, right, then people feel more comfortable in the deal. And that the equity raise really wasn't that hard, because all we had to raise was $1.5 million on the deal. So it was pretty easy. Overall, yeah, your team is super, super important. Of course, you don't want to go and get a team of very inexperienced people that don't know what they're talking about. You could do that, because somebody else, everybody has to start somewhere, but it could be more challenging for you to go out and raise money that way. It could be more challenging to go out and get the deal done successfully.
Yeah. So what's your business plan for this property? Are you guys looking at a longer term hold, or are you guys in and out kind of thing?
It's going to be about a 5-year hold,
Yeah.
given that the market all stays as we expect it to. With a purchase price around $4 million, after the 5 years, we should sell around the $7.5 million mark.
Yeah.
So, that's the operation that's going on now. And I'm pretty hands off of it, to be honest. I just kind of get the reports every month right now and making sure everything stays in check. We actually had a little issue. Somebody ran into, there's 8 buildings, and somebody ran into the side of one of the buildings. They fell asleep at the wheel. They weren't drinking. There was no drugs or alcohol involved. They literally just fell asleep at the wheel, ran right into the living room for one of the units, and we ended up having to get rid of 12 units, or had to vacate 12 units. So
Wow.
thankfully, insurance is taking care of our loss of rent, taking care of making sure that the individuals were put up in a hotel, and but that was a little bit of a setback, and that
Yeah.
kind of pushed our numbers down on the books for a few months.
I don't think anybody underwrites expecting a car to crash into the building.
Right.
Yeah.
Right. And, thankfully insurance is going to cover most of the damage. So that's a good thing.
Yeah. And I think it just highlights the importance. Like you mentioned, building a team. You need somebody who understands multifamily insurance. Just because, I know of some horror stories where people, work with an insurance broker and they get the wrong product, and it doesn't turn out well.
Yeah. Yeah. It's very important. And you just have to know and follow people that you trust. There's a lot of moguls that are out there, people that can really help you and are there to help you. In particular, Joe Fairless, I think I saw you've had him on your show. Is that correct?
Yeah, that's right. Yep.
Yep. So Joe's a coach of mine. He's a friend of mine, and ultimately him and I are going to work together this year to get things done. And there's other people out there that, can give you and offer good advice and probably point you in the direction of a good insurance broker and things like that if you need it. So make sure you leverage that.
Yeah. And some of our viewers might be wondering, you mentioned how you seller finance this deal. Can you explain a little bit about how seller financing is a little bit different than conventional financing?
Oh, yeah, absolutely. So instead of going to a bank and having all the underwriting go through a bank, you're just having the seller basically financing the deal for you for a certain amount of time. That amount of time could be 1 year, 2 years, 5 years. In our case, it is 2 years. And I mean, it's a much easier, cleaner deal, could be at least, and you get the power of a seller finance. So you don't have to go through the underwriting process, and it can free up some more capital potentially for you.
Yeah. So with this specific deal, you guys are looking at seller financing for 2 years, probably interest only, and then you're looking to get conventional for the rest of the holding period?
Yep. So really what's going to happen is within this 2-year time period, and really by the middle of this year, we should be done with all the rest of the renovations. So once again, with the car going through the one of the buildings, that set us back a little bit on the renovations. We could have been done really by the end of first quarter of 2019, but it looks like it's going to be a little bit longer than that. Still within our 2-year time frame. But then when we refinance, we're going to be able to refinance at a higher rate because we have newer units that have increased rent, and we're ultimately going to have a better value for it.
Yeah. And that's the best structure when you have a value add deal, because you're able to pull out, a decent chunk of your initial capital, right?
Yep. That's exactly right. And given that, the markets stay strong, which I believe that they will within the next, foreseeable couple of years, especially in this specific market, I'm not concerned about, having the seller finance and running into something crazy when we try to go refinance.
For sure. So on your side with this specific deal, and then we'll talk more generally about your investing, how does somebody like you on the GP side or general partner side profit from a deal for putting it together?
So you get a percentage of the monthly rent. You get a percentage of, so whatever the income is, based on your splits that you have with the general partners and limited partners, then you're going to get a piece of the upside when you go to sell or refinance the property, as well as a monthly piece of the cash flow that comes in. So The way that we have it set up is a 70-30 split with the general partners, limited partners. 70% goes to the limited partners after we're paying 8% pref on it. So 8% preferred return. And then 70% of the profit above that goes back to the limited partners and 30 back to the general partners. So
and I'll just interrupt here. Just if somebody doesn't know, a limited partner is the investors. They're the investors that are bringing the money to the deal. I don't think I explained that at the start. So,
well, and you know what? A limited partner could also be a general partner. So a general partner could put in some of the money as well. Actually, we encourage that because that's just part of the deal, and it makes you, I think, more credible as an investor to put in some money in your own deal. So, and you get a piece of both sides. So if you're a limited partner and a general partner, then you get 30% and the 70%, right? You get two upsides.
Yeah.
So at the end of the day, multifamily investing is a phenomenal way to do to make a lot of money, get a lot of tax benefits, and have economies of scale to keep you moving forward.
Yeah. And looking more bigger picture with your investing long-term, you started off as a real estate agent. What was it like moving from getting those commission checks in to switching over to an investing side where maybe the cash flow wasn't as strong, but you're looking more long-term?
You know what? The cash flow is actually a lot stronger in the investment world. For one, because you're not chasing commissions. You know, as a realtor in residential real estate, you're taking buyers on buying appointments, or you're going to show them houses. You might show them 15 or 20 houses and they don't buy anything. Therefore, you don't get paid. So you wasted all that time to do it. And that was really my big struggle. I'm not a fan of that. I'm not there to deal with people's emotions. That's another thing with residential real estate that I just don't like to deal with. I'm more a cut and dry, black and white type of guy. And so I'd rather, either you want to take it or not. Yeah. Right. And I'm just not a commission type of a guy. And so making the transition was really easier for me. And it's still, I'm still in the space. I'm still in residential real estate. We're still wholesaling. We did 52 houses in 2018. We should do somewhere around 100 this year. So, it's a transition period, but that, I guess, if that answers your question.
Oh, yeah, no, it definitely does. And how has your life really changed then with how you've built up your portfolios? What has it allowed you to do?
Man, God, what has it not allowed me to do? I look and see how this has changed my life, and the freedom that I get to live the cash flow life is really good. I built up enough rental portfolio now that the rentals pay for all of my personal mortgage plus a little bit of other mortgage. So, and that just keeps growing. And so I don't have to go to work anymore necessarily. I guess I'm financially free or whatever you might want to call that, but it's not, that's just one freedom, and I'm just starting. At the end of this year, it's going to be a whole nother game. It's going to be another conversation.
Yeah. And you mentioned legacy wealth at the very beginning. What does legacy wealth look like for you down the road?
I think that's an ever-changing question because, if you would have asked me even 2 years ago what I would think the end of 2018 would look like, or the beginning of 2019, it wouldn't be what I have now. And so legacy wealth means that I'm going to pass down to future generations of my Bauer family that, the legacy of real estate. So I will have a large portfolio that I own myself, and we'll be able to pass that down, the wealth creation that we're doing. Actually got my dad to quit his corporate job and jump into real estate, and he started a wholesale company in the state of Iowa, where I'm from. And so him and I now are working together, and we're buying a portfolio of properties there as well. And so, who knows where it's going to go.
Yeah, no, that's great that you got your dad involved.
It is. It's exciting. He's actually here in Phoenix right now. He's here till Friday. Been in here for the holidays. So, we've been brainstorming ideas, and we actually made a couple of offers on a few properties in Des Moines while he was here, so we can talk about it in person. And it's been an amazing feeling to do that. And ultimately, I think that I have a brother as well who's 4 years older than me, and he also wants to get in the business. So I think he's next.
You'll have a whole family squad going at it. That's great.
That's right. That's right.
Yeah. So Scott, you've got your podcast. Where can people find the content you're putting out?
Definitely go to investthispodcast.com. That's the podcast website. You can subscribe and not miss any episodes. Hopefully we're going to have you on the show. I don't know if you talked with my assistant to get that set up, but
for sure, happy to do it.
We have some great speakers that are going to be on this year. I think we put out 52 or 53 episodes so far. So, it's been a lot of fun, and I encourage anybody to go there. You can find it, find out how to contact us there. And other than that, we're all over social media. So you can find me on all the platforms. Feel free to reach out anytime.
That's great. Scott, I want to thank you so much for taking the time to come on the show and share your success story.
Seth, I appreciate you having me here today, and have a great one.
Yeah, sounds good. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.